committee report, which we had put out for public consultation. And the whole why of this regulation is really to strengthen the governance mechanisms in the MIIs. Now, as you know, the MIIs are expected to play multiple roles. They wear multiple hats. They are not just a commercial organization that is meant to run a business. They are meant to also provide, in effect, public infrastructure. So the exchanges, the clearing corporations, the depositories, the systems that they run are not proprietary in the sense of there being just like any other systems of any other private organization. They are in the nature of public infrastructure because these entities have a lot of regulatory protection. So given that they have a lot of regulatory protection, they are expected to run their systems in the form and manner of it being a public infrastructure and not just their own proprietary systems. The third area of their operations is really to act as a first level regulator. So they not only need to be very careful about their own compliances with the regulations, but also to look at the compliances by the registered brokers, by the registered DPs, by the listed entities. And it was the committee's finding that perhaps these three different roles that the MIIs have were not getting adequate and equal importance. So a lot of what you are seeing as the manifestation of the working committee's report is that each of these three pillars of the role of the MIIs to function as a profitable, viable commercial entity, plus provide public infrastructure, plus function as a effective first level regulator, all these three things need to be delivered. So that is really the central thought, and it is reflected in almost everything that you see here, whether it is the proposed structure of MIIs, the nature of board governance, the accountability of the KMPs, the code of conduct, and this is, an important piece you would have noticed on page 3, item number 12, that board members and KMPs will be held accountable if they are aware of wrongdoings but have not appropriately reported the same. Because you're not just another entity, you're a market infrastructure institution. And if you become aware and you do not report, then you are complicit. So this is a very important part of governance and code of conduct. And overall, therefore, the objective is that this should bring in much more balanced operations of the MIIs with a lot of transparency and accountability. We then move on to item number 2, which is the buyback of securities. I think that has already attracted a lot of interest. I think somebody in the media reported that SEBI has picked out its favorite mode, and which is true, because we feel that the tender route is the more equitable route to buyback, and that the other routes are vulnerable to favoritism, let me say, because nobody really knows that in the exchange mechanism, when is the company going to come in order to buy back the shares, and only a few people may be aware of it, and benefits may flow to those few people. It is not an equitable mechanism. And in that context, we are therefore seeking to phase out the stock exchange route for buyback. But in the interim, since we don't want to have any knee-jerk reaction to anything, and we have given a glide path, in the interim, we propose that there will be that minimum utilization of the earmarked amount should be increased from 50% to 75%, which means that if you announce a buyback, you must at least do 75% buyback. And also that there will be a separate window on the stock exchange. It cannot be nebulous and it matches with just anybody. There is a separate window for buyback. And that will also assist going forward in terms of identifying the tax-related issues, which are important in the whole buyback mechanism. The tender offer route, we are trying to optimize by reducing the timeline. And you will notice that one of the things that we have done, in SEBI, we've spoken about ease of doing business, of business process re-engineering. And you would have noticed on page 4 that we are completely removing the requirement of filing a draft letter of offer with SEBI and awaiting our observations. It's just eliminated. So there, we believe that this is a already listed entity. It has ongoing disclosure requirements. They are making public their intentions, and there is no need for SEBI to have any additional requirements or to make any additional observations, and people are expected to comply with the laws of the land. So removing altogether the requirement of filing and observations, which saves time, and also cutting short the tendering period and the period requirement for payment. We have now all digital payment mechanisms, so there's no reason for it to take so long. We are also permitting upward revision of the buyback price right up till 1 day prior to the record date. Right? And why the record date? Because naturally, if somebody is taking a decision on the basis of the buyback price, then he needs to know that before the record date is recorded and the cutoff is made. There's also some mandatory dissemination of information that is in line with our usual philosophy of disclosure and transparency. And overall, we hope that this will really streamline the buyback process, also create a level playing field for all investors once the stock exchange route is phased out. The third is a very important piece of regulation. It is facilitative in nature. In the mutual fund industry, as you know, that right now all the online platforms are either registered as brokers or investment advisors, and they need to comply with a very large set of regulations which were never really designed or intended for somebody who is offering merely an execution platform for direct plans of mutual funds. So therefore, the thought is that we will create this new category, and in this new category, people will then be free to be able to offer this facility, which has anyway become very popular amongst investors, to go online and to directly invest in direct schemes and direct plans of mutual funds. But the offerer need not comply with a whole host of either broker regulations or investment advisor regulations. They comply only with the specific regulations related to execution only platforms. So hopefully this will make it a lot easier for people to offer this while complying in a very convenient way. Of course, also we have brought in the whole concept of investor protection into this whole framework. Uh, Essentially, the advisory committees on this subject and the consultation papers, there were two models which were proposed. We finally decided that we as a regulator don't need to pick favorites on this one. We are okay. The first model, which is called Category 1, is where the platform operates as an agent of the AMC. So he gets paid by the AMC, he has a contract with the AMC, and he's functioning as an arm of the AMC, registered with AMFI, because the AMFI is the sort of a trade body for the AMCs. So they will not register with SEBI at all. They will be treated as agents of the AMCs, and whatever regulation we need to do will be via the AMCs. The second model is CAT 2, where the execution only platform is an agent of the investor. And then he has to be registered as a stockbroker, but this will be a limited purpose stockbroker so that he doesn't have to comply with needless regulations. And here they will be registered with SEBI. SEBI will give the registration and the investor will pay because he's an agent of the investor. So both models will be available and people will be free to pick whatever works for them. The next item is very, very critical, I think, to us in SEBI. While we celebrate technology and all that it can do to democratize access to the markets, we also worry about cybersecurity. We also worry about disruption of trading services, not every time because of cyber attacks, but simply because when businesses grow very large and the technology begins to become a little dated, it doesn't always hold up under pressure. And we worry that particularly where this risk is concentrated in terms of some of the large brokers today that we have, then the investor is left with no alternative. If his broker is down and his position is open and the market is volatile, he is very, very vulnerable. So the objective here is to provide a mechanism for such investors to come directly to the exchange to close out their positions and to close their and to cancel their orders. So this direct access will be facilitated only, only and only for risk reduction. They cannot increase positions while their broker is down. But if the broker is down for a certain period and there is a mechanism that has been described, then this alternative mechanism comes up and people are free to come, access their positions in the market, close them out, close their pending orders so that risk is reduced. So it's a risk reduction access to investors, and this can be triggered either at the request of the broker himself, because if he goes down and he sees that it's unlikely he's going to be able to come up soon, he can request the exchanges to trigger this. Or even if the broker does not request, but suo moto, the exchanges feel that this has been taking too long, the broker is not able to come up, it's a volatile day, then they can automatically, or they can suo moto trigger this facility and let the investors know that they have an alternative option to come here and execute their risk reduction trades. This would be a first across the globe. It's a very, very important initiative from our perspective. It will require building of systems and execution. So we expect that roughly in the third quarter of 23-24 is when this will go live. But all the planning and the working and the building will happen in the interim. Next item is a sort of linked item in the sense that it talks about stockbrokers who will henceforth be designated as qualified stockbrokers. You're probably aware that three of our RTAs, that is registrar and transfer agents, are called qualified RTAs because they handle very, very large volumes of investor data and transactions. And they have certain additional requirements which they have to comply with over and above what regular RTAs have to comply with. So similarly over here, in order to address the concentration risk which exists in our market today, there are, as you know, for instance, the top 10 or top 12 brokers will account for very, very large percentage of the market volumes. So in order to mitigate the concentration risk, what is proposed is that on the basis of some very transparent criteria, first of all, certain brokers will be identified or designated as qualified stockbrokers, and there will be an enhanced requirement on them in terms of risk management, of course, all types of risk, market risk, IT risk, cyber risk, etc. Much higher standards will be expected of them. And there will be a higher obligation on the MIIs and on SEBI in terms of monitoring them as well. So for instance, in terms of our inspections, etc., frequency of inspection, regularity of review, etc., all of that, there will be a greater responsibility on the MIIs and on SEBI as well. The next item is relating to FPIs. As you know, we had a few months ago constituted a dedicated standing committee for FPIs to be able to focus on their requirements. They are an important stakeholder in our markets. And one of the first things that they wished us to take up was to have an easier onboarding process and a registration process. And based on the recommendations of the working group that was constituted under the aegis of that committee, a number of recommendations have come, including processing of papers based on scanned copies, digital signatures, SWIFT mechanism to get confirmations from overseas bankers, and so on. Certain risk mitigation measures are also in place, so it's not as though only scanned copies will be used. The plan is really because they need a number of registrations and accounts to be opened. So what happens is that it all becomes sequential and everything has to wait for the next thing. Whereas the plan here is that once you are relying on scanned documents, you can do a lot of things in parallel. But the final activation of the accounts will only happen when the physical documents come. But still, in the meanwhile, you've been able to do many more things in parallel. So this is expected to bring down the time required for FPI registration and also to facilitate making it more easy. The next one is in respect of green bonds. As you know, this is going to become a very key area of finance for all countries. And it is very important that we facilitate finance of green initiatives while safeguarding against greenwashing. So what we have done in this regulation is to facilitate three or four things. Number one is to actually enhance the scope as compared to our earlier regulations, enhance the scope in terms of the definition of green debt, and bring in new proposals, for instance, in terms of pollution prevention, pollution control, eco-efficient products, etc. We've also introduced the concept of blue bonds, which relates to water management and the marine sector. And as you know, going forward, a lot of carbon credits can be generated not just from the forests in the country, but from the um, marine resources that the country has. So this will become very important once we move into the carbon credit area. Also, yellow bonds related to solar energy and transition bonds or transition finance bonds, which, as you know, are forms of finance which are targeted at helping companies which are in an area of high carbon impact and assisting them to transition to low carbon impact. So each of these areas is very important to us, but at the same time, we also needed to address certain greenwashing related risks. And this is something that also we are proposing in the regulation. As always, a glide path approach is being adopted, and time is being given to existing issuers because they're already there, they've already raised money in order to have a smooth transition to this regime. The next item, number 8, is again developmental in nature, ease of doing business, greater flexibility to the AIFs. So here, what is proposed is that the AIFs, who up until now were only permitted to buy protection by way of CDS, will now be permitted to sell protection by way of CDS. And this is bifurcated depending on the category of the AIF. So category 1 AIFs, which are meant to serve a somewhat different social and economic objective, will still be permitted only to do hedging, which means only buying protection. But Cat 2 AIFs, which are the largest category of AIFs in our country, they will be permitted both to do hedging as well as to sell CDS. The construct is really in the nature of a synthetic bond. So basically what will happen is the AIF, let's say they have 100 crores and they want to create a synthetic bond on corporate XYZ. They will actually buy GSECs worth 100 crores, but then they will write or sell protection on company XYZ, and the two together will constitute a synthetic bond. So on the other side, whoever is the buyer of that CDS will get protection against that particular issuer. But on this side, the AIF will basically treat this asset like a synthetic bond, since it's money. In the event it is ever called upon to honor that CDS, it will have the money to honor it because he can go to the market, sell the GSEC, and honor his commitment. Category 3 AIFs have even more flexibility. Not only can they, of course, buy protection and sell protection in the form of synthetic bonds, but since intrinsically they are permitted a certain amount of leverage, so they are allowed to write protection without the underlying GSEC as well, because it will be counted as in the nature of leverage. So there's even greater flexibility for Cat 3 bonds. So we believe that this flexibility to the AIF industry is important, and also from the perspective of the development of the bond market. We think this is also an important step. More and more players, if they come in and participate in this market, it will only be good. The next point in terms of number 9 is in terms of streamlining certain requirements for debt issuers in the country. As you know, the debenture trustees are the custodians of the interest of debenture holders whenever there is a market issuance of bonds. They have expressed concerns to us that in the event of a default, when they seek to be appointed on the board of the company, then that does not happen very often. And therefore, the amendment that we are bringing about is that the issuers will need to amend their articles of association so as to cast an obligation on the board that in the event of a default, which has been defined, the person who is nominated by the debenture trustees must be appointed as a director. So this will give more teeth to the debenture trustees in order for them to fulfill their obligations towards their investors. Also some streamlining of timelines. Number 10, REITs and InvITs, as you know, these are relatively new instruments, hybrid instruments in our markets. And at this stage, we have had extensive discussions and interactions with the industry. And based on a lot of that guidance and inputs, we have introduced various governance norms for REITs and InvITs, which is covered under item 10, much on the lines of our LODR requirements for listed companies. But because the nature of the instrument is different, certain carve-outs and dispensations and adaptations have been done for REITs and InvITs. Similarly, item 11 also relates to certain provisions which needed to be streamlined, again, appropriately adapted. One of the important things, of course, was unclaimed, unpaid dividends, which we also hope should not be high, but in the event they are, then there is a proper way of dealing with it. The last item is the framework for adoption of cloud services by SEBI regulated entities. This is a principle-based framework that we have brought in. And the objective really is to ensure that all our regulated entities address the issues of risk assessment, regulatory and legal compliances, have very clearly articulated rights, responsibilities, and accountabilities and sharing of responsibilities contractually with their cloud service providers. And also at the same time giving SEBI and other government agencies the right to access the data which is stored in the cloud wherever required, whenever required in terms of any investigation, inspection, audit, etc. So the objective really here is to give the benefit to people. You know, some of them, they were hesitating to go on the cloud. They were not quite sure what was SEBI's views on this. And so the objective was to clarify that, yes, you can use cloud services, but naturally there is a lot of risk mitigation that you need to do in terms of protecting sensitive information that belongs to the investors. So this is a broad summary of what has kept us busy in the morning today. Happy to take questions.
Thank you, ma'am. We open for questions. Yes, Yash, CNBC.
Good evening, ma'am, and to the board. I'm Yash from CNBC TV 18. Before I ask my question, I just want to have a little clarification. As far as the consultation paper on the tender route for buyback is concerned, it had a couple of more points. I mean, just to name a couple of them. The maximum limit was about 40% as compared to 25%. Also allowing two buyback offers in a year for net debt-free companies.
That's correct.
In the paper that we have in front of us, those couple of points are not there. So
that's right. Because so the purpose was to get feedback from the market on the need for such a relaxation, etc. But as you know, those restrictions are governed under the Companies Act. They are not governed by SEBI. So therefore, first there has to be a proposal from SEBI to MCA to say this is what the market is desirous of doing. And therefore, can you consider relaxing those? And then in consultation only if that happens. So there is no point in our giving our approval when anyway there's a constraint from the other side. And the second is also that the consultation paper spoke of tax problems, right? As you know that our current provisions are not very fair, right? Peter pays for Paul's tax. Now that's not a very good idea. So therefore, we are also engaged with the ministry to discuss as to in what way this can be sorted out. So these two things will go hand in hand. that resolving the issue that Peter should not pay for Paul's tax and the Companies Act, relaxations will go hand in hand, and we will take it up at the appropriate time once we build consensus.
Okay, now to the question, and this is with respect to the primary market. In the recent past, we've seen approvals going all the way to over 100 days once the DRHP is filed. I mean, are you of the view that this has to be reduced, and for whatever reason it's gone beyond what it should not be? To your sense, what should be the ideal time that you are looking at as far as approval is concerned? And for whatever reason, a lot of times from the side of investment bankers, also merchant bankers, there is a delay. In that case, for no fault of yours, the issue gets delayed. What does the regulator do in such instances?
आपने तो सब ये सब पहले ही मीडिया में खूब छाप दिया है, सभी कुछ बोलने की बात बाकी बची नहीं है, पर तब भी मैं कह दूं, clearly I think there are two objectives that SEBI has. I have said this, those of you who are aware of my statements when I attended the Association of Merchant Bankers meeting, that, as you know, I've been a merchant banker myself, and therefore I understand that timing is everything. And for a client, when they want to raise capital, if for any reason the timing is missed, it is a very, very serious issue. And it is our desire that SEBI should never be the reason why the client misses timing. There is enough data that we have to show that there are some merchant bankers who are repeat offenders. What do I mean by repeat offenders? They bring one document to us. We say, here are the 25 lacunae in the document. They go back, they take a lot of time, they come back with incomplete papers. I think it's a desire to tell their client that we have filed with SEBI, but comprehensiveness, neither the client asks or anything. And then the question is that it's all a question of, it's being footballed within, back and forth between SEBI. But where was there the transparency as to exactly how many lacunae you had? And what do I mean by repeat offender? Same merchant banker comes back 2 months later for another client and has the same 25 lacunae in the document. मतलब आपने कुछ सीखा नहीं, एक बार सेबी ने बोला है और वो एविडेंट है आपको, तभी भी आप वही के वही, and then not just second time, third time, fourth time. So I think our objective is that, look, we fully own delays at our end, but the merchant bankers need to fully own delays at their end and inadequate papers that they submit. And simply to show the client that they have filed papers with SEBI will not work now. So we will clearly have a process with full transparency. And as I said in that meeting, we will introduce a concept called returning the papers. It's not a rejection. We're not rejecting it, but we are not accepting it. And we are simply saying, this is incomplete. Please refer to our checklist. Please refer to our FAQs. And please submit complete papers. If it's not complete papers, our clock won't start ticking. So now it's up to the merchant bankers that why is it that they, every time they come with a different client and they have the same 25 lacunae, hopefully that problem will go away. So we have to do our share. The industry has to do its own share. But we have a shared objective on behalf of industry who needs to raise capital that you cannot have delays. Now, with the new processes that we put in place, it will become very clear as to where the delay really is and where the inadequacy is. And I'm committing on behalf of SEBI today that we will work very, very, very hard to make sure that there is no delay at our end. But yeah, we will return.
Related to buyback regulations, I wanted to know, when you say you want to phase out stock exchange route, is there any timeline do you have in mind?
Yeah, we've stipulated it. Someone can answer. Yes, Mr. Rao.
From 2023, so instead of, there are two changes you have done. Presently, maximum limit is 15% and also 6 months window. So from 2023 April, we'll make it 10%, that much they can do, and 66 working days it will be there. And 2024, 1st April, so it will be 5% and also it will be, number of days will be 22 working days. So basically from 1/4/2025, it will be phased out.
Can you please use the mic, please, Madam?
This seems to be exactly what the committee had recommended. I'm just confirming that SEBI has accepted that
Yes,
recommendation in
that's
total.
right, that's
correct?
right.
Yeah.
Yeah,
Okay.
please continue.
Ma'am, another question on qualified stockbrokers, which you have mentioned. Is there any assessment that how many could fall in that category?
Yes, because we don't make any policy without data now. So we do a back testing of everything to make sure we understand the implications of our policies. And right now we think that a total of 16 entities will become qualified stockbrokers based on the first set of criteria. And then we will refine the criteria along the way, but initially 16 brokers.
Rajesh,
मैम दो सवाल है
थोड़ा
एक हाँ
louder कर दीजिए.
दो सवाल है मैम एक तो ये था कि जो बायबैक के रेगुलेशंस हैं इसमें अपर लिमिट तो आपने तय कर रखी है लेकिन लोअर लिमिट शायद नहीं है कि कितना कम से कम आप ला सकते हैं तो ये क्या कहीं एक जरिया तो नहीं बन रहा है कि मार्केट कैप बढ़ाने का क्योंकि इंस्टेंसेस ऐसे हैं दो तीन जहां पे
मुझे क्वेश्चन सवाल का मतलब नहीं समझ
नहीं
आया।
बायबैक
Lower
में
limit
जैसे बायबैक में अप टू 25% था टेंडर रूट के जरिए और ओपन ऑफर के जरिए 15% है
हम्म,
लेकिन कोई लोअर लिमिट नहीं है I
जैसे
mean,
कि
कितने अमाउंट तक का आप ला सकते हैं लाइक रिजर्व प्लस पेड अप कैपिटल प्लस रिजर्व का लोअर अमाउंट नहीं डिस्क्राइब्ड है तो क्या एक
okay.
जरिया नहीं बन सकता है या बन रहा है हम रिसेंट एग्जांपल्स देख रहे हैं कि जहां पर ये हो रहा है कि एक तरह से देखें तो अमाउंट इतना छोटा है कि आप समझें कि उसको मार्केट कैप बढ़ाने के लिए इस्तेमाल हो रहा है तो ये सिर्फ एक बायबैक की बात कर रहा हूँ इसी तरह के इंस्टेंसेस ऐसे भी हैं कि जहां बहुत ही 5 करोड़ भी मतलब इनकम नहीं है और वो स्टॉक स्प्लिट कर रहा है या बोनस दे रहा है तो इस तरह के इंस्टेंसेस हो रहे हैं तो ये कॉर्पोरेट एक्शन के इंटेंट इस तरह की जो चीजें हैं इनको रोकने के लिए इनको कुछ मतलब आप एनफोर्समेंट का रास्ता अपनाएंगे या रेगुलेशन का रास्ता अपनाएंगे
Ma'am, I'm just to, can I ask a follow-up question on what he's asked? I'm Yatin from CNBC Awaaz. Open market buyback is usually to support stock prices and, be more efficient over a period of time, which usually is done to support stock prices. And a tender buyback is, more like a quasi-dividend, if I may put it so, in the hands of shareholders. Because, the shareholders on a pro rata basis, get the money from the tender buyback. Whereas in the market buyback, it is usually, done by companies which find their shares undervalued and, probably they need to support their stock prices. So in a way, when, SEBI is doing away with open market buybacks, has this thought been, put into process? Because, as Brajesh was mentioning that sometimes it may be a manipulative tool, but sometimes it would be in favor of small investors who probably get stuck in companies which markets do not value fairly. So, open market buyback would suit,
So
as a
पहली
window.
बात तो ये है कि
Or rather put a
पहली बात तो
threshold.
ये है कि आपके सवाल के जवाब में कि टेंडर रूट में क्या तकलीफ है अगर इन्वेस्टर देना चाहे तो वो प्राइस वही है तो इनफैक्ट प्राइस तो पहले से ही नक्की की जाती है और अनाउंस की जाती है इनफैक्ट मार्केट में पता नहीं चलता है कि आज का प्राइस क्या है कल का प्राइस क्या होगा सो ये तो अच्छी बात है कि जिसको किसी इन्वेस्टर को वैसे लिक्विडिटी नहीं मिल रही है और उसे उस प्राइस पे निकलना है तो वो टेंडर रूट से बिल्कुल आ सकता है तो ही इज नॉट बीइंग डिनाइड एनी अपॉर्चुनिटी एट ऑल अब बाकी रही बात मिस्चीवियस इंटेंट तो जैसे आप कह रहे थे मेरे दिमाग में एक ही चीज घूम रही थी कि देखिए हमने स्टेटमेंट किया है कि हम किसी को नहीं कहेंगे कि आप क्या कर सकते हैं आप क्या नहीं कर सकते हम बोलेंगे आपको ये सही प्रोसेस अपनाना पड़ेगा और डिस्क्लोजर देना पड़ेगा अब उसके दिमाग के अंदर घुस के समझना कि ये क्यों हो रहा है क्या हो रहा है मैं तो यही अप्रिशिएट करूंगी कि अगर इंडस्ट्री और मीडिया दोनों हमें सुझाव दें कि हम इसे किस तरह से इंटेंट को रोकें तो हम तो बहुत ही खुश हो जाएंगे क्योंकि द रियलिटी इज कि आज के दिन में हमारी मार्केट में कंप्लायंस विद द लेटर ऑफ द लॉ होता है कंप्लायंस विद द स्पिरिट ऑफ द लॉ नहीं होता है एंड दैट इज समथिंग दैट इज अ मैटर ऑफ आई थिंक इट्स जस्ट सैड I think it's nothing else. It's just very sad because people are bright enough, smart enough, they know what is the regulatory intent and the objective of the regulation, but to constantly find ways to circumvent and to do things which are technically in compliance but in spirit completely violative is not a good thing. So if we have to move in that direction, I think this is a very good cue. Thank you. Maybe हमारे अगले साल के KRAs जो हैं, हम उसको अपनाएंगे कि spirit of the law का भी compliance होना चाहिए. Thank you.
सजित
मैम एक सवाल और।
ठीक है, क्या कर लिए प्लीज।
बाजार के कामकाज के घंटे बढ़ाने की चर्चा वापस शुरू हुई है और आपने रेगुलेशंस में अप्रूव कर रखा है। तो अगर आते हैं आपके पास फिर से, आई मीन एप्लीकेशंस आती हैं कि हमें अप्रूवल्स के लिए आती हैं, तो आपका क्या व्यू होगा उस पर?
आई थिंक मुझे कोई याद दिलाएं कि हमने फ्रीडम दी थी स्टॉक एक्सचेंजेस को सर, काफी महीने हो गए उनको दी थी हमने फ्रीडम कि आपको बढ़ाना है तो आप बढ़ाइए। हमारी कोई रिस्ट्रिक्शन नहीं है, हमने फैसिलिटेट किया है। इज दैट राइट?
यस मैंने
Exchanges can take their view.
यस मैंने कहा
I just had a follow-up question to what Yatin asked, and I'm just confirming in interpretation of what the committee recommended on buybacks and also what SEBI has approved, that you all seem broadly okay with buybacks being used as a method of returning cash to shareholders. But if buybacks were being used by companies to prop up their market prices, which of course now will not be allowed if the open market buyback route is closed, then that was not acceptable to you, which is one of the reasons
No,
why
let
you've
me
done
rephrase.
away.
No,
All
Menika,
right.
let me rephrase.
Sure, thanks.
I think that first we should distinguish between prop up and support the price. Okay, so prop up is when you do something on the sly, support is when you do it openly and equitably. So according to us, the tender route also supports the price, right? So if you think your company is not fairly valued and you want to give greater value and you want to support your stock price, please do it. But do it in a transparent way and do it in an equitable way. So we have no problem in somebody saying, I'm using the buyback route to support my stock price because we think we are undervalued. But to do it selectively in an inequitable way where only a handful of people know when you're going to come into the market to buy, that is simply not okay. So that is the subtle difference.
यस सजित।
Ma'am, just clarification required with respect to MI regulations here. You spoke about the fact that they would now need to have public interest directors. You've seen that in the case of exchanges, when PIDs are appointed, it requires permission of SEBI, approval of SEBI. Will that be the same regulation which will be extended to other category of MIs as well?
Who already hai. In fact, that was one of the recommendations that SEBI did not accept from the committee. The committee had recommended moving the number of public interest directors, which is currently at 50%, to 67%. And SEBI felt that that would be too intrusive and not required. And it would be best if there is a balance between management and shareholder directors on the one hand and the public interest directors on the other. And in any case, if there is a difficult situation, then the chair has a casting vote and the chair is always a public interest director. So we actually did not accept. This was one of the recommendations of the committee that we did not accept. But this is already there and already true for all MIIs. It's not new.
Also, we are seeing a trend of how many of these companies are getting listed on the stock exchanges, and we will see many more coming in there. In that sense, will there be separate regulations for these MIs, how they will go ahead and list?
So those regulations are already there. So for instance, fit and proper criteria for the shareholders, listing and trading on the other exchange, not you yourself. You cannot list yourself and trade yourself on the same exchange. So these guidelines are already in place. We are not envisaging anything new or additional. Those rules are already in place.
Thank you.
I do have one more question, a slightly minor one on the code of conduct bit with regards to the mechanisms announced for market infrastructure institutions. And you emphasized this in your summary as well, saying board members and KMPs will be held accountable if they are aware of wrongdoing and do not appropriately report the same. Did this bear emphasizing, given that this is a requirement under corporate law as well, that if you are aware as a board member or a KMP of any wrongdoing in the company, it is in fact part of your duty to report it? The law, the mother law in itself requires it for all companies.
See, the question is really that, as I said earlier, that, in our market, unfortunately, things have manifested that people only comply with the letter of the law, right? So if tomorrow, say for instance, we had passed an order against somebody saying you were duty bound to bring this to the notice of somebody, to the audit committee or the chair or to SEBI, and you failed to do so, hypothetically, if we had passed an order, it would probably not hold because their defense would be, where does it say in your regulation that that's what I have to do? So you see, the spirit of the law versus the letter of the law is constantly the issue that was highlighted. So it is important, and we thought it was important enough for us to now bring it into the letter of the law so that nobody has a defense to say, where did you tell me this was my responsibility?
Reena, economic times. Menaka will come back to you.
Okay, thank you.
Hi. I will just ask you, on this buyback, there was one suggestion to have price revision. The board of directors would have, which was not there, right, in the current
Yeah, so we
regulation. it's-
facilitated it,
Yeah,
right
is
up to one day before the board, before the record date,
Has it been-
upward revision.
Has it been approved? Okay. Secondly, ma'am, ASIFMA, that the industry body for FPIs, have actually argued, against FPI, the local data storage in India. They have written to SEBI also in this regard, and they have raised their concerns on this front. What is SEBI's view on that?
Okay, so to clarify, there is no proposal from SEBI asking that FPI should keep anything onshore. What we have proposed is that the market intermediaries who deal with the FPIs, namely the designated depository participants and the custodians, in respect of their interactions with their FPI, all the data that they are gathering, one copy should be kept in India. That's what we've asked. By the way, out of this, the payments data is already onshore or supposed to be onshore because of RBI regulations. And RBI regulations for payments, as you know, is extremely stringent. It's that only one copy, and rather it can be only kept onshore, it can't be kept offshore. The data has to be kept onshore. Now, in respect of the KYC and other data, we are requiring that one copy should be kept onshore. This is not a requirement on FPIs. This is on the DDPs and the custodians. Okay, we've spoken to all manners of FPIs, custodians, DDPs, and to ASIFMA as well. Can assure you they have no problems with this particular requirement.
Okay, thanks.
Ma'am, just
I would just like to add, there are 2 3-letter words in our markets. And somehow it's almost become a Pavlovian response. Ghanti bajti hai, the dog thinks khana aa raha hai. The minute these 2 3-letter words are uttered, there are a number of entities and who, I think often without even reading our proposals, feel compelled like a Pavlovian response to object and to say, oh, it's very bad. And the media obviously quotes them. It's sad. It's sad. SEBI does months and months of consultation and deliberation, and people without even reading, their first Pavlovian response is to say it's bad for us. It's really sad. So I would request you that when this Pavlovian response is faced by you, ask them, so tell us exactly what is your problem? And ask them the first question. Have you read SEBI's consultation paper? Fully? Fully. I would really be extremely gratified if before you report, I don't blame you because people say it, you're only quoting them, but it's become Pavlovian.
Sorry, to
Menaka.
move away from that, if I could ask one more follow-up question on the code of conduct. So you said that as a regulator, you were disappointed that people were honoring maybe the letter of the law, but not quite the spirit of the law. But there's nothing you can do to enforce spirit except to add more letters to the law. So I'm just still curious about specifically what behavior or action are you hoping to prevent or remedy through this code of conduct clause? Is this directly, and I know you may not answer this because I'm taking a specific name, but is this directly related to the events that took place or unfolded at the National Stock Exchange over the last decade?
So Menika, you know that we will not respond to specific names, but I think the principle of it is that everywhere in the system, and it's not limited to any one institution, everywhere in various organizations, wherever there is wrongdoing, people are aware of it. And they shrug their shoulders and say, not my job. We're now making it their job, at least as far as MIIs are concerned.
I do have,
So
sorry.
it's as simple as that. And it may be errors of commission, it may be errors of omission, commission, omission. We are now saying we see silence also as complicity. That's the message.
We see silence also as complicity. Okay,
Yes.
so I have one more question, which is not related to anything in the press release today, but it was widely reported, not widely, but widely reported that the SEBI board would deliberate over the proposal it had made with regards to asking companies to confirm or deny any big news reported by the media. And I was wondering if there was any update on that. Have you decided if that was to
That
become
is still in the
mandatory?
consultation stage. Am I right? Consultation is over, deadline is over. We are now collating the responses. So we've not yet discussed it at the board. We've just passed the closure date of the consultation.
Ma'am, just to follow up on the buyback with respect to tender, you made one point here that you permitted upward revision in the price one working day prior to the record date. In the consultation paper, there was also a particular provision of cutting down the number of shares one day prior to the record date. What happens to that aspect?
So we think that that's not appropriate because the way that the price of the stock has moved has been in response to that particular information. Okay. And then cutting it down. So supposing you've announced a buyback is at a very healthy premium to the market. Okay. And you said, I'm going to buy so many lakh shares. So obviously the price will run up. Now what happens? You suddenly say, no, I'm going to buy only a fraction of
You
this.
adjust the
So that is not appropriate. However, if the price is such that, and that's why upward revision, because that is only in the interest of the shareholder. So we won't permit downward revision. We will permit an upward revision because finally we are focused on the investor.
one question
Just
as
to
far
follow
as
up on that question, if you increase the price upwards, and the first level is the 10% one, which is net worth of the company, above that it would require shareholder approval. And the total amount moves above 10%. Yeah, but the shares have not been reduced. They are allowed
So
to
what
be
we
reduced.
expect will happen is that since this facility is now been given, the flexibility is given, people will probably take their board approvals in an appropriately flexible manner.
And one question I wanted to ask, there are instances where before a corporate action at any company, there are certain notes which are returned by brokerages. A lot of times they get the mandate to execute those corporate actions on behalf of the company. I mean, is there a way that SEBI would look at any sort of relation which one instance would have been dependent on the other one?
So you're saying, is there a parallel between audit firms doing consulting and merchant bankers wearing two different hats? Is that your question?
My question is if merchant banks are writing a positive, to put it very straight, writing a positive note on the company and getting the mandate to execute the transaction on behalf of the company because they wrote the note.
Maybe we should look at it. let's look at it. See, all of these issues fall in the spirit of the law. So I'm so glad you all have raised this because, see, technically we cannot find any violation in this, right? But it's a question of spirit of the law. So maybe we should think about it.
Yes, Brajesh.
मैम दो सवाल थे। एक तो ये था कि जो MIS के कॉर्पोरेट गवर्नेंस की कमेटी में एक जगह पे ये लिखा हुआ था कि इनका रोल रेगुलेशन भी है और बिजनेस करना भी है। तो उन्होंने वहीं पर छोड़ दिया, वो शायद आगे आपको करना होगा कि उसको कैसे देखना है। तो उस पार्ट पर आपका कोई व्यू बना क्या?
हाँ हाँ
उसको
बिल्कुल।
कैसे देखना है? दूसरा सवाल ये कि आपने एक्सचेंजेस के पास कंसंट्रेशन की ब्रोकर्स के पास कंसंट्रेशन की बात की और आप रेगुलेशंस ला रहे हैं, लेकिन जो एक्सचेंज में कंसंट्रेशन है उस पर कोई थॉट?
आज मुझे बहुत अच्छे अच्छे आइडिया मिल रहे हैं आपसे। चलिए बरुआ सर, आप नोट करिए, वी आर गेटिंग वेरी गुड आइडियाज। तो हम लोग मैं सिर्फ एक ही बात कहूंगी कि मेरी टीम तो मार्च के तो KRAs बिल्कुल फुल है, बोर्ड मीटिंग का एजेंडा भी फुल है, अब तो जून बोर्ड मीटिंग की बात चल रही है कि कहाँ पे क्या ले जाना है। तो ऑल दीज गुड आइडियाज वी विल सर्टनली इवैल्यूएट, वी शुड, it's a question of systemic stability and we should look at it and we appreciate the inputs, we will note it and we will look at it. But let me answer what had you said earlier, your first question was what?
पहला सवाल ये था कि जो गवर्नेंस कमेटी थी, MI गवर्नेंस कमेटी, उसने ये कहा था कि इनका रोल रेगुलेशन का भी है और इनको बिजनेस भी
you
करना
asked, do we
है।
have a view? We have a view.
So conflicting
और वो
role है।
circular, हाँ, और वो एक्चुअली काफी कुछ वो कमेटी रिपोर्ट में ऑलरेडी है, लेकिन उसको थोड़ा और फ्लैश आउट करना है और वो सर्कुलर आएगा। इट विल बी वेरी स्पेसिफिक। देखिए अब नाउ वी आर डन विद मदरहुड स्टेटमेंट्स, क्योंकि लाइक यू योरसेल्फ आर सेइंग, लोग they just pay lip service to it, so we are done with that. So we will be very specific on what we expect, and it will be very specific, it will be measurable, it will be reportable, it will be disclosable, and we will make sure that people don't get away with just giving some gyan.
Yes, please wait.
Ma'am, just to ask a question on the financial influencers, you've been talking about it and some of the members have also been talking about it. How do you plan to bring in more regulation for them? I know there are a couple of regulations already in place, but will you try to clarify where they fit in terms of regulation and control of what they say and how they say on various platforms?
So first of all, I will repeat what I said last time, that this is a problem that every regulator across the globe is facing. When we met in ISCO, it was a very hot subject. And I think we are all trying to find the right approach to doing the right thing. I think at this stage, the only thing I can say is that SEBI's approach is to unbundle a complex issue, because if it's complex, you can't put your arms around it. So our objective will be to unbundle it and see what exactly are the risks that we are worried about. So risk A, risk B, risk C, risk D. And we have not yet reached a conclusion as to whether we will try and put all of these together, or whether we will say, no, risk A needs a hammer, risk B needs a chisel, risk C needs some pesticide. I don't know what it will need. So we may have, the jury is still out on whether we need one umbrella under which everything is handled, or whether we need to unbundle the risks and deal with them separately, and whether that might be a more efficient way to do it. So we are still deliberating. It's a complex issue and we are still deliberating.
Yes, please. Ma'am, I had a question. Over the last 2 years, SEBI has...
Rajesh, can you please identify?
Sorry?
Okay, please
I'm
identify.
Rajesh Gajra from Informist. Over the last 2 years, SEBI has tightened the listing regulation clauses pertaining to related party transactions by listed companies. And we are seeing, and this has been significant improvements, particularly with regard to taking shareholder approvals more often, and also with more disclosures in their postal ballot notices. So this is working quite well. currently we are seeing some cases where shareholders have rejected and some companies have come back with more disclosures and more, I mean, they're giving more details. So this is having an effect. What my question was, do you see any scope for, and one of the reasons why this is working so well is because the promoters cannot vote in these resolutions, which is why it's working so well. Is there any scope for doing something similar for proposals, companies' proposals, which are not relating to related parties, which, because when promoters vote, they always vote in favor of what they want, of what the companies want to do. So is there any scope for that?
So I will go behind the philosophy and the rationale. See, why is it that in related party transactions and some other areas, we say majority of minority? Okay. It is in areas where we feel that the minority shareholders and the promoter shareholders' interests may not be aligned. But for many items, their interests are aligned. If the company grows, if the company is profitable, if the company diversifies, if the company enters new areas, if the company hires the right people, in all these areas, the interest of the minority shareholder and the promoter shareholder are aligned. So there is no need to say you cannot vote. It's only where we feel that there is a potential conflict is where we feel that we need to have this majority of minority. That is the guiding philosophy. And at the moment, we don't see any other areas which we need to address.
Yes, business standard.
Hi, ma'am. I'm Khushbu Tiwari from Business Standard. In the first question, in the MI related norms only, you have said that because there are many responsibilities and many definitions that are being worked upon for KMPs, they said there will be a different nomination and remuneration committee because we have seen certain cases where it might be assisted within the organizations also. Will there be members apart from the same MII appointed in this committee so that there is more no governance lapses in that? Like,
Sorry,
what will
which
that committee
The
constitute
NRC
about?
committee? It
The
will have,
NRC committee and
it will
other
have
separate.
public interest directors.
Yeah,
The
but
chair
that will remain at 50%, that as you said.
No, but the NRC is always chaired by, is that right? Sorry. No, NRC? Independent, not necessarily public interest. Okay. So, no, so the question is that wherever we felt again that this is something which needs to be more arm's length, we have insisted that on those committees, there should be a public interest director as the chair. Wherever we feel that interests are more or less aligned, we are happy to have anybody serving over there. So that's the basic philosophy.
In the 12th framework that for cloud services, because there were many concerns raised by many other FPIs and everybody else, as you
I
earlier
thought we
answered.
just replied to that.
Yes. But my question is on the risk. You had mentioned that there will be no shared responsibility of risk and cybersecurity concerns that work on the cloud service providers. That was one of the concerns raised by several groups of investors. And because now you have actually said that it will be based on 9 broad principles. So how does that will there be any shared responsibility, or will it be the responsibility of the RE only?
So let me clarify. Finally, the end responsibility can only be on the RE. If he chooses to outsource some of his activities to somebody else, he has to ensure that contractually and operationally he is in control. If he loses control, then it means we lose control, right? So he cannot say, oh, I had a data leak, but it happened from ABC service provider and I have nothing to do with it. How is that even tenable, right? So the sharing of work and responsibilities of operational, that I will look after this, you will look after that, that has been detailed, given in great detail, that what is it that you can do. So line item by line item, you have to specify whether this particular function, and we have a list. See, our life is very simple. We have a circular with 55 items. We are saying, भैया आप हमें बता दीजिए, item number 43 कौन कर रहा है, item number 82 कौन कर रहा है, sub item number this कौन कर रहा है, and that will have to be captured in the agreement. So allocation of roles is possible because after all we are permitting outsourcing, But you can never outsource responsibility.
One question only on the disclosure part, as the consultation is already over and I think it is under discussion with SEBI. They have already received comments from the market players. There have been concerns among investors where the corporate bodies or the companies might have given out some information that they may not have been following upon in certain timelines that they themselves have provided, or there have been concerns on their own buybacks or their own, not just buybacks, but their own uh, uh, other offers. So,
अरे सीधा सीधे बोलिए ना, मुझे समझ में नहीं रहा आप किस चीज की बात कर रहे हैं.
so maybe cases like Nika and other aspects where we have seen issues where the companies might have announced on several, they said that this is coincidence that the data is coinciding with what we have announced. Not just specifically this case, but several other, maybe other cases where the companies announced that we are venturing into this specific business, but there have been no plan presented towards the investors. So will these also be included in the disclosure norms, which the companies themselves are coming out, but there have been no plans put forward to
No,
in the
so-
formal communications?
So if this feedback comes back to us, because as we just said, we've just closed the consultation. If the feedback comes and we say, yes, there is merit in this point, we will look into it. But at the end of the day, I think the point really comes back to what was discussed earlier, that what is the intent behind something, we cannot get into the heads. And let me tell you that legally in our judicial system, that is not a valid ground to say, I think they did it for this reason. You cannot say, I think. So we will have to see as to what is it, what is the circumstantial evidence, what does it point to, how does it deal, what does our regulation say on spirit of the law, letter of the law. So that we will have to see in due course. Right now, that is not the situation. So whatever is the feedback that we'll get, we'll evaluate.
Ma'am, just to follow up, as you said, there is nothing in the regulation which sort of, comes in the way of what happened wherever. But just as an instance, if retail investors are kept away from tendering their shares in a particular offer because of whatever reason, the way things are structured from the company's side, for the sake of retail investors, does it merit an intervention at times, situation, depending on the situation? That is the first question.
No, I think that any event which happens in the market, which certain stakeholders feel aggrieved, we first examine to see if there's any violation. If there is no violation, our next automatic, our Pavlovian response is there a need for policy intervention? So do we need to change our regulations? So for instance, you saw recently that we changed the timelines for payment of dividend and redemption for mutual funds. Because we said life has changed, with the wonderful payment system that RBI has put in place, there is no good reason for it to take so long. So why should it take so long? So similarly, all other technology-enabled processes which are there, our response will always be that if there was no violation, should we review what our regulation says? Because is there a structural vulnerability in our regulation? And is there an outdated lacuna in our regulation? So we will always introspect and see, do we need to change something in our policy, which we will review. So that is our normal response, that we need to be inward looking and see whether we need to upgrade our regulations.
The
What
government
about
recently allowed
issuance of
Ajit,
additional
Ajit.
shares in the issue in the case of bonuses and others? Today, if there is a record date, the shares get credited to your account maybe 3 days, 4 days, or 5 days, even a week after the record date. Now the technology has evolved.
I
and
agree with you.
So what is SEBI doing?
I'm
about
agreeing
it?
with you. We are deliberating.
Ma'am, just to add to what Yash said, there are certain regulations for security issuances wherein there is a portion allocated for QIPs because the regulator or whoever made the framework is of the view that institutional investors are much better in discovering the price for a particular IPO, and hence when you have a 90% QIP issue, 10% is allocated for retail investors. And on the other hand, SEBI says that since there is unequitable uh, uh, distribution of cash during a buyback in an open market operation, then is something that like, are you looking to also introspect about the
No.
equity issuances where,
No.
there is a retail quota?
No.
Because,
No.
on one hand, we have
अरे आपने question
regulator
पूछा
of
मैंने
the view
जवाब
that
दे दिया.
Okay,
चलिए,
we'll
next
go for the
question,
last
please.
two questions. Yes, please. You first. Yeah.
This is Aparna from Money Control. Since we are talking about influencers and social media, there are regulated traders who advertise their MTM on social media. There has been issues of unverified and verified MTM and all that. And now there is a private company that verifies MTMs. Is this a space that SEBI is looking at? Is this something that exchanges should look into, or would you wade into this?
So, as I mentioned earlier, all aspects of this we are looking at in an unbundled fashion to see whether we can attack each of the risks and malpractices independently without trying to put a wrapper around everything. We are evaluating. So this is also an issue. We'll deal with it.
Ma'am, a very quick question. The government recently, through a draft, has said that insurance companies will be allowed to sell other financial products. Now, of course, other financial products also includes mutual funds, where the regulator happens to be SEBI. In that case, do you see if any clash in terms of just the ideology, if insurance companies were to distribute mutual funds?
So, have I understood what the insurance regulator has said wrongly? I thought what they meant was people who sell insurance policies can also sell other products,
Correct.
not insurance companies.
So agents of insurance
Ha,
companies.
agents or brokers of insurance companies. Right. So there's a big difference.
Yes, last question.
So just to clarify, we believe that we will operate on first principles for everything. And we are in fact very inspired by IRDA's numerous liberalization moves and easing up moves, and we think that they are very, very constructive, very, very positive. And we are evaluating ourselves as to what is it that we want to do in this respect, and it would finally manifest itself in the area of saying that in our country we currently have a mixed or a hybrid model. We predominantly have entity-based regulation, but we also have examples of activity-based regulation. Okay? So where there is an entity whose principal regulator is X, but for certain activities, its regulator is Y. But I think the important thing in all of this is all the activities are regulated activities. So what we as regulators don't like is people take our registrations and take our stamp of registration and then go do stuff which is not under our purview at all. And the market thinks that, oh, it's a SEBI registered person doing this, but that activity of that person doesn't come under us at all. It's outside of our jurisdiction. So the only thing we don't like is people doing things which are unregulated, whether by us or by other regulators, and because it's a structural misuse of the registration that we have given them. But in terms of if somebody is doing two activities, one regulated by one, the other regulated by the other, we have many cases. We have bankers to the issue. We have depositories who are banks. We have custodial banks. We have clearing members who are banks. We have rating agencies. So there are many things where we work harmoniously together, and we can continue to work harmoniously together. But what we don't like is unregulated activity.
Ma'am, can I ask a question on the issue of, the new green subcategory bonds that you all have spoken of in the press release? But specifically, there is one line that says SEBI will specify do's and don'ts to safeguard against greenwashing. Is there any more detail you can give us on this in terms of new regulation, guidelines, or just a sort of caution note of sorts?
Yeah, so essentially it is about, again, letter and spirit. So when you say we are coming out with a green initiative, let it be a green initiative. It's not as if, you are raising capital at a lower rate and trying to benefit from there, but not do it for the purpose for which it is being done. So it can happen, for example, you are doing solar, you could be doing anything else. So you should not, that misleading part should not be there.
So are you suggesting there will be further, like there will be an amendment to the regulations, or there will be new
There'll be
regulations
circulars.
to
There'll be
safeguard against?
circulars.
There will be circulars?
There would be
that will-
circulars to specify. So for instance, what we're saying do's and don'ts. So those will be notified under circulars to say this is what you must disclose, this is what you must do, this is the process you must follow, etc., etc.
Okay,
Ma'am,
and
a
will
follow-up
that
question
require
on this.
third-party accreditation of some sort?
So we are evaluating it, but we have not yet reached a conclusion on that.
Thank you
Okay,
very much.
the last question to Brajesh.
मैम एक जो काफी दिनों से कंसर्न भी है और एक्सचेंजेस भी अब खुलकर ये बात कह रहे हैं कि F&O की ट्रेडिंग खासतौर पर ऑप्शंस की बहुत ज्यादा बढ़ रही है, वो एक गलत किस्म की प्रवृत्ति भी हो रही है कि जिनको समझ नहीं है वो भी आ रहे हैं, तो इसको रोकने के लिए नॉट इमीडिएटली लॉन्ग टर्म में कहीं कोई थॉट है? एक तो ये है, दूसरा सवाल ये है कि कमोडिटीज पे जो 7 कमोडिटीज पे पाबंदी लगी थी वो आई थिंक आजकल में खत्म होने वाली है, जिसका नोटिफिकेशन था 1 साल का, तो उस पर कहीं से कुछ मैसेज है कि आगे वो ओपन अप हो पाएंगे? और अगर तीसरा सवाल ले लें तो मुझे ये पूछना था कि सीडीएसएल इंसिडेंट के बाद जो मार्केट इंफ्रास्ट्रक्चर इंस्टीट्यूशंस हैं उनके साथ कोई बैठक हुई, कुछ और किस तरह की सेफ्टी रखनी चाहिए या फर्दर प्रोटोकॉल्स क्या होने चाहिए, उस पर अगर कोई बातचीत हुई तो।
मैम एक और सवाल, आपने you had indicated some time back that you're going to bring in as well like feature for secondary market. You know, the RBI recently said that they will allow blocking of amounts in their bank accounts. So where are we on that?
So let me answer backwards. So as per for secondary market, we are very actively engaged with the industry. We have given till the end of December for the industry to come back with their thoughts and recommendations. It is again a new concept. And so we want to co-create the solution. We don't want to sit in our ivory tower, make a proposal and then say we'll do public consultation. It's completely new and it's very different, never been done, anywhere in the world. And therefore we are co-creating the whole process and the whole system. Some feedback will come to us by end of December. It will take perhaps some more time. I think that we should certainly have a consultation paper on this out before the end of the financial year. And as in everything else, we believe in a glide path. So we will do glide path transition. First, some pieces, some segments of the market will come under that, and then slowly it could be expanded. The most obvious one for early start is delivery-based in the cash segment. So all of this is being discussed, and we would look at it in that context. As बात हो गया, F&O में आप बताएं, F&O ट्रेडिंग कम हो जाएगी तो आपकी व्यूअरशिप भी तो कम हो जाएगी, फिर क्या करेंगे हम लोग? So these are all. Yash is laughing. No, not true.
He has no option.
He has no option. But see, the question is, I had said before that we cannot be a nanny state. Okay. So we cannot tell people don't do it. I think the two things that we need to do, the first we have already done is to say that please operate within what you can afford. So this whole question of margin being collected from the investor was designed to make sure that people do not overstretch themselves by the brokers funding the margin. And then people literally, we have heard stories where people have committed suicide. This is, on the one hand, we can sit here and maybe even crack a joke about it, but for those families, it's deadly serious, literally. So the question is that when the regulations, so the spirit behind or the purpose of our regulation on saying collect peak margin from the investor was so that people do not take positions beyond what margin they can rustle up, and therefore to that extent, more or less, their loss is capped. Otherwise, it's literally unlimited loss. Unfortunately, as has been recently reported in the media itself, you know, there is infinite innovation in the market on wanting to circumvent the rules. So अब वो भी हो रहा है कि prop trading में डाल दीजिए. So the minute it is prop trading, so there is no question of client कौन. वो तो it's being kept in a parallel set of books. So those parallel set of books are running parallelly, and as far as the regulator is concerned, it is being, and the exchanges are concerned, it is being presented as prop. So 100% margin funding is happening. So these are malpractices which, you know, is a question of what is it that we are as an ecosystem promoting. And again, I would say that, you know, we all need to take responsibility for it. So the media also, you know, it is a reality. A lot of this, you know, fever for FNO trading is also fueled by the media. It is true. It is also fueled by the influencers. It is true. It is also fueled by just human greed. It is true. It is also fueled by the ease of doing business. So, you know, it's just so easy for people to do it today. So therefore, it's being fueled by all of this. As far as we are concerned, we feel that if the risk management and the ensuring that the investor brings in his own margin happens, then relatively speaking, he cannot lose more than he can afford. Of course, again, we've heard stories about people literally माँ के गहने, you know, गिरवी रख के वो trading कर रहा है, margin post कर रहा है, and then he's losing it all. So those are very sad stories, and we are very concerned about it. But I think as an ecosystem is what we will have to, you know, come together, all of us as a community, and see that, you know, what is it we say about investor education. You know, investor education, the most powerful tools are in your hands, right? People listen to you. Usually what the regulator says, they dismiss, but they listen to you. So you are really powerful in this to really educate the investor that, do you really want to do this?
Ma'am,
Last
one
one on
question.
commodities, let me answer the question. कि, उसमें बहुत सारे स्टेक होल्डर्स हैं और बहुत ये डेलिकेट सब्जेक्ट है क्योंकि हमारे जो फार्मर्स हैं उनके बारे में बिकॉज ऑब्वियसली ईच ऑफ दीज कमोडिटीज आर एग्री कमोडिटीज राइट मेटल्स बुलियन वगैरह उसके बारे में के तो ये बात है ही नहीं तो ये हमारे फार्मर्स के बारे में है और जब हम उनकी सोचते हैं तो हमें बहुत ध्यान से प्रोज एंड कॉन्स वे करने पड़ते हैं और बहुत सारे स्टेक होल्डर्स हैं इसमें डिसीजन मेकिंग के लिए तो वो डिस्कशन हो रही है और होगी and we have to wait and see what is the consensus that emerges.
Ma'am, one question on one of the decisions only.
One second, Rajesh.
Cyber incident. So I think the two things that you know we learned from that, and we had extensive deliberations with all the MIIs and everybody. I think the first thing that we learned was that the immediate response was the right response of saying quarantine. The minute it was detected, they shut off and everybody else shut off connection with them. So they were literally put into isolation and into quarantine so that it did not contaminate anywhere else. So I think that was a lesson well learned and that will now become a part of our SOP. It was done instinctively by everybody, but now we are going to stipulate that it should be an SOP. The second thing is that there needs to be a lot more focus on the issue of cybersecurity, and we have had very detailed deliberations with all the MIIs and impressed upon them the need to do this, and certain roadmaps have been discussed and outlined, and certain timelines have been discussed and committed. So everybody is committed to it. I think nobody is complacent about this issue.
Ma'am, one of the decisions that has been taken today is about the execution-only providers for mutual funds, the direct plans. In the consultation paper, there has been suggestion that there will be a suitable cap on the fee that they charge for the revenue. Has that been agreed upon? What kind of capping or what kind of?
So that will all be detailed in the circulars. So the important thing is that this cannot become a platform which becomes effectively a commission for direct plans. Okay, so that we will not allow. It is meant to be an execution only platform. If you want to charge 1 rupee, 2 rupee, 10 rupee, 20 rupee, whatever you want to charge, you're free to charge. But we will not allow any ad valorem fee of any nature under either model, because otherwise it will basically become the equivalent of getting paid commission for direct plan, which we will not allow.
Last question. to
Last,
Ankit.
just one question, ma'am, on the rating providers for ESG norms. It's going to be around nearly an year when you last came out with the consultation paper for rating providers. And what are the concerns where this paper is stuck? What kind of comments did you receive from either from the international bodies or from Indian bodies also, where the standardization or other aspects are stuck upon? Or maybe you have suggested net worth related concerns also, uh, which could be brought about for rating providers, because as
अरे
you
हम
mentioned for
लोग खूब
greenwashing.
सारा input लेके उस पे deliberate करते हैं, and we think that we need to incorporate some of the feedback that has come. It's a new and emerging area. आप लोग immediately उसको concerns label कर देते हैं. You should count how many times you use the word concerns in a sentence, about 5 or 6 times. So, these are new and emerging fields. And in fact, we are most likely to bring a second consultation paper, because based on the first consultation paper and a lot of deliberations that we have had, we feel that maybe the first consultation paper will undergo so much change that we need to have a second round of consultation. And those are not concerns. That's a good democratic process of consultation and a humility of the regulator to believe that we need to do this consultation, especially when we're doing something new, and it's not about concerns.
Thank you for answering my concern, ma'am.
Talking about one more concern, which more many time investors.
अच्छा कभी कभी कुछ तो positive बोल दिया कीजिए. So since you have not, you don't choose to do that, let me give you some statistics. Okay. Since April of this year, so in this financial year, since April of this year till about 8th or 9th of December, so not even just over 8 months, SEBI has issued 115 regulations or circulars. Okay. Out of these, 44% are ease of doing business, facilitative, and liberalization in nature, and 55% are controlling and regulatory in nature. Mind you, the internal target that we had on this, because we are very conscious of our role as a development of the markets and not just for regulation of the market. The internal target that we had set in our minds was we want about 25 to 30% to be liberalization and the balance to be regulatory. And the reason is quite simple. Right now, we are harvesting the low-hanging fruit in terms of liberalization and opening up. Over time, these opportunities may become less, but on the regulating side, as we just finished discussing, there is infinite innovation in the market to circumvent every possible regulation. So that keeps us very busy. Because every time we move, they move. It's like a game of chess. Then we have to move, what is that, queen to pawn 4, pawn 4 to queen 3, jo bhi hai. So we have to keep moving. So the amount of sheer volume that we have to handle to plug the innovative malpractices in the market will always exceed the opportunities for doing positive work. But currently, these are the statistics. So, I think the collective psyche of saying everything is a concern, everything is a problem, maybe we need to stop and think that is our collective psyche appropriate? 44% ease of doing business and opening up and facilitating new things is not a small number.
Agreed. What I was going to ask was regarding the investors complain many times when the trading platform fails that they have lost X amount of money because of the orders they could have placed. Now, I want to ask with this new investor risk reduction access platform going to be operational in Q3 as you announced, is there going to be a mechanism based on the cancelled orders or the time lag in between to compensate
Absolutely
investors?
not. There is no question. The investor has to be very clear that market risk is his and his alone. And if we are giving him an additional mechanism for risk reduction, but if this is in his mind, so please make it very, very clear, This is not going to be an opportunity to say that, you know, if I had sold my stock at the peak and bought it at the trough, I would have made 3 crores. So now somebody needs to give me 3 crores. Really sorry. That is not the purpose and intent of this new regulation. It is to facilitate, because it is a reality that when you have dependence on technology, there will be occasions when technology can fail. At that time, you have the ability to cut your risk. That is the limited purpose. There is no other purpose, and there is no intention of such purpose. If people are desirous of covering that kind of risk, they should work out other mechanisms. For instance, many of the institutional people have multiple brokers. They can have their own risk mitigation in that way. If you're dependent on one broker or the other, don't be. Then you have 2 brokers, and if you have a position, you please go to the other. If one is down, please go to the other. There are many mechanisms that people can do. We will not at all encourage, please read my lips, we will not encourage claims of any losses, real or imagined.
Yeah, ma'am, related to this, there was a discussion paper as well in the past where you have said that there should be proper disclosure within 24 hours. The stockbrokers need to disclose. I want to ask, in this scenario, if there are repeated failures, will there be penalty on them at least?
So we already have, right? We already have.
Technical glitches paper that we brought out some time back, which actually puts the onus on the stockbroker to report within an hour, I think, of any glitches. And we've defined glitches as 5 minutes or more of disruption. Plus, the stock exchanges themselves will also have a mechanism now of tracking these glitches by using their own APIs. So it will not just be on a reporting basis, it will actually be on an observed basis. The stock exchanges have been empowered to levy fines as required, but that will be decided by the stock exchanges.
Thank you so much. Thank you. Please help us
Thank you.
to join
Thank you
for
very
SIT.
much.
Thank you for joining.